Hello everyone, I'm your accounting buddy CA Neeraj B. Welcome to my YouTube channel @Accounting Buddy NB. Today we are starting a new chapter, Origin of Transactions, Source Documents and Preparation of Vouchers. In this video, we will learn what source documents are and why they are essential in the accounting process. We will also learn in detail about common source documents, accounting vouchers, supporting vouchers, and we will also guide you through the process of preparation of vouchers, ensuring accuracy and compliance in bookkeeping. So grab a seat, relax, and watch the full video to master this topic. Let's get started. Let us familiarize ourselves with the term source document. Every time a business is involved in a financial transaction, a paper trail is generated. This paper trail is an evidence basis which the transactions are recorded in the books. These documentary evidences, being the basis of recording accounting entry, are known as the source document. They are also known as the supporting documents. Source documents do not necessarily need to be a physical hard copy. They may be in a traceable electronic form. All the source documents should be kept and stored for future reference. Checks written to make payments, receipts generated for payments, supplier invoices, sales invoices, employees working hour timesheets are some of the examples of the source documents. Let us learn key features of source document. Source document always indicates the date on which the transaction occurred. This date becomes the basis of recording the transaction. Source document also identifies the parties involved in the transaction in terms of buyer, seller, or other involved entities. It also specifies the monetary value involved in the transaction. Source document also describes the nature and the type of transaction, that is whether it is a sales, purchase, payment, receipt, or a loan transaction. Further, the source document is often signed or stamped by the concerned parties to confirm the validity of the transaction. Common source documents used by the business are cash memo, sales invoice, purchase invoice, receipts issued for the payment received from the customers, check, supplier statement, credit card statement, loan statement, and bank statement. Some of these source documents will be studied in detail along with their specimens during the course of this lesson. Let us now understand the importance of source document. First and foremost importance of source document is that they are the evidence of a transaction. They act as proof that the transaction has occurred, making them essential for auditing and verification. They ensure accuracy in recording a business transaction. Source documents ensure that the entries in the accounting system are based on the factual information, and it reduces the chances of errors. Source document also ensures legal compliance. They support compliance with legal and tax requirements by providing a trail of documented financial activity. Source documents also create audit trail. They create a traceable history of transactions and aiding internal and external audits. Source documents ensure transparency and accountability. Source documents promote financial transparency by showing clear details of the transactions. Source documents strengthen the internal controls of a business. They help in monitoring and controlling the financial activities, minimizing fraud or mismanagement of risk. Cash memo is an important source document in any business. Let us discuss cash memo in detail. A cash memo is an important document issued by sellers to buyers when the goods or the services are sold in exchange of cash. Key points to remember about cash memo are: first, it is a proof of the transaction. A cash memo serves as an evidence of a cash transaction between the buyer and the seller. For seller, it is an evidence of cash sales, and it is an evidence of cash purchase for the purchaser. Cash memo contains essential details of the business transaction. It includes key details such as the date of the transaction, description of the goods or services, quantity, price, and total amount, and other terms and conditions, plus seller's signature or the stamp. Cash memo supports tax compliance. It often includes applicable taxes such as GST or VAT and can be used for tax reporting by both buyer and the seller. Let us understand in detail all about cash memo with the help of the specimen displayed on your screens. A cash memo will have a trade name and the registered office address of the legal entity. Cash memo are serial number controlled. Date on which the cash memo is issued is also mentioned. This is the date on which the cash memo is recorded in the books of accounts. If the business is covered under VAT, the VAT registration number is also mentioned. Generally, the columns available on a cash memo includes serial number, quantity, description, rate, discount, and the total amount. On the total amount of the goods bought by the customer, applicable VAT is also charged. The total of the cash memo is mentioned in both figures and words. Special conditions, if any, applicable on the transaction are also mentioned. In the given specimen, the special conditions mentioned are related to the return and the refund policy. The cash memo is signed or stamped before it is issued to the customer. It is prepared in duplicate. Original copy is handed over to the customer and the second copy is kept for record and accounting purpose. Let us now learn about the invoice or a bill. An invoice is an important commercial document issued by the sellers to the buyers when the goods or services are sold on credit. Key points to remember in this regard are: an invoice is a proof of a transaction. An invoice serves as evidence of a credit transaction between the buyer and the seller. For seller, it is an evidence of credit sales and it is an evidence of credit purchase for the purchaser. An invoice also contains essential details regarding the transaction. It includes key details such as the name, contact details, and the address of the customer, date of transaction, description of goods or services, quantity, price, total amount, payment terms, other terms and conditions, plus the seller's signature and stamp. And invoice also ensures tax compliance. It often includes applicable taxes like GST or VAT and can be used for tax reporting purposes by both the buyers and the sellers. Let us learn more about an invoice with the help of a specimen of a bill displayed on your screen. The trade name and the business address represents the legal entity issuing the bill. Bills are serially numbered for control and compliance purpose. Date of invoice signifies the date on which the transaction happens and the transaction is recorded in the books of accounts on the basis of invoice date. In case VAT is applicable, the VAT registration number is also printed on the invoice. Invoice also contains the name and the complete address of the buyer. The invoice generally have the columns for serial number, quantity, description, rate, discount, and amount. In case VAT or GST is applicable, the same is also charged on the basic value of the invoice. The total invoice value including the VAT is mentioned both in numeric and in words. Special conditions, if any, are also mentioned on the invoice. In this specimen, the conditions mentioned are: goods once sold will not be returned, payment to be made within 30 days from the date of the invoice, and the products sold are covered under 1 year international warranty. And finally, the invoice is stamped and signed. Let us now learn about another document, that is the receipt. When cash or check is received from a customer, a receipt for the amount so received is issued to the customer. A receipt is a formal acknowledgement of the receipt of money from the customer. A receipt is prepared in duplicate. The original is given to the party making the payment and the duplicate is kept for record. It includes the key details such as the date, amount, name of the party, nature of payment and the mode of payment. In case the mode of payment is check, check number, date of check and the name of the bank is also captured on the receipt, and the conditions, if any, related to the amount received are also mentioned. Let us learn more about the receipt with the help of a specimen displayed on your screens. A receipt will have the trade name and the official business address of the legal entity issuing the receipt. Receipts are serially number controlled and the date of issue is always mentioned on the receipt. Name of the person or the legal entity from whom the money is received together with the amount received is mentioned in words. Further, the mode of payment, whether the amount is paid in cash or through the check, is also mentioned. For instance, in our specimen, the customer Lovely Samsung Distributors LLC has paid $25,000 by check. Therefore, the word cash is striked off and the check number and the date of the check together with the name of the bank is also mentioned. Another important information which is mentioned on the receipt is the invoice number and the date of the invoice against which the payment is received. In case payment is received in advance, it is also mentioned on the receipt together with the reference document number such as the quotation number or the purchase order number. It is signed and stamped and the special conditions like checks are subject to realization are also mentioned on the receipts. Next document about which we will learn is the pay-in slip. It is a document used for depositing cash or a check in the bank. Pay-in slip is a pre-printed form available from the bank. Pay-in slip has two parts. The main part of the pay-in slip, which after filling with all the required information together with the check is dropped in the box kept in the bank for this purpose. The other part is called the counterfoil, which with all the relevant filled information is retained by the depositor. Since the pay-in slip together with the check is dropped in the box, the counterfoil is not signed and stamped by the bank. Apart from the account holder's bank details, date, amount and instructions if any, below additional information is also filled. In case of check deposit, check number, name of the check issuing bank and the name of the bank branch is also mentioned. In case of cash deposit, currency note and coin count for each denomination is also mentioned on the pay-in slip. Let us learn how a bank pay-in slip is filled with the help of the specimen displayed on your screens. There are two parts of a pay-in slip. The smaller left-hand side is customer copy and the little bigger right-hand side is a bank copy. The pay-in slip is used for both cash and check deposits. However, separate pay-in slips needs to be filled for cash and check deposits. That means in a single pay-in slip, both cash and checks cannot be deposited. The date of deposit needs to be mentioned on both the sides. The bank account number in which the cash or the check is required to be deposited together with the name of the account holder needs to be mentioned on both sides of the pay-in slip. Special instructions, if any, are also pre-printed on the pay-in slip. For instance, in the displayed pay-in slip, the written instruction is please prepare separate slip for each type of deposit and three boxes are given: cash, local checks and outstation check. In case cash needs to be deposited, the red star marked information is required to be filled. The most important information is the denomination, detailing the notes or the coins value and the corresponding number of notes or coins. And in case of check deposit, all the green star information is required to be filled. The name of the person depositing the amount together with the telephone number of the account holder is also required to be mentioned. Other instructions like PAN number of the account holder needs to be mentioned in case the amount to be deposited is more than 50,000 INR. And the instruction that in case of check deposit, funds are available to the account holder for withdrawal only after the check is cleared and the funds are realized. Let us learn some basics about another source document, that is check. A check is a document in writing and is in a pre-printed form provided by the bank. The check contains an unconditional order directing the bank to pay on the date of the check specified amount of money out of the money held on behalf of the account holder. Parties involved in the case of a check are drawer, the person writing the check and the instructing the bank to make the payment. Drawee is the bank on which the check is drawn to make the payment. And payee is the person or the entity to whom the payment is made. The amount of money to be paid is mentioned clearly in both words and figures. The check is dated and signed by the drawer. The date on the check determines its validity, which is usually 6 months from the date of issuance in many countries. The check details are entered on the counterfoil, which remains with the account holder and is a source voucher for recording the transaction. Let us learn more about check through the specimen displayed on your screens. There are two parts of a check, check leaf and counterfoil. Counterfoil is kept by the drawer while the check leaf is for the payee to deposit it in his bank account. Every check has got a pre-printed check number on both the parts. The bank account number and the name of the bank account holder or the drawer is mentioned on the check leaf. There is a space for the signature of an authorized signatory on the check leaf. Without signature of an authorized signatory, the check is not valid. The check leaf also has the name of the drawee bank along with the full address of the branch. The branch identification code is also printed on the check leaf. The date on which the check is issued is also mentioned on both the sides of a check, together with the name of the payee in whose favor the check is issued. The value for which the check is issued is also mentioned both in figures and words. All the above information needs to be filled correctly and check must be signed by the authorized signatory before the check is presented to the drawee bank for the payment. Next document which we will study is debit note. A debit note is a commercial document issued by a buyer to a seller to indicate an adjustment in the buyer's account for the reasons such as return of goods due to defects or damages, incorrect pricing on the invoice, overcharged quantities or services. Let us understand the debit note with a business scenario. ABC Limited purchases 50 shirts from XYZ Limited for $20 each, totaling to $1,000. Upon receiving the shipment, ABC Limited finds that 10 shirts are defective and decides to return them. Now, if we analyze this transaction, initially 50 shirts were purchased for $1,000 on credit. The invoice was booked for $1,000 and $1,000 was payable to XYZ Limited. However, when 10 shirts were returned and a debit note of $200 was issued, the amount payable to XYZ Limited got reduced from $1,000 to $800. This explains the business situations under which the debit note is issued and its impact on the accounting. Basis business scenario discussed in the previous slide, let us understand how a debit note of $200 looks like. Debit note is serially numbered and the date of issue is mentioned on it. It will also have the trade name and the complete address of the business. The name and the address of the person or the legal entity to whom the debit note is issued is also mentioned on the debit note. Complete details with the reasons of debit note issuance are mentioned on the debit note. In this business scenario, the details related to the quantity returned, its value, and the reasons of return are mentioned on the debit note. The reference number of the original invoice and its date is also mentioned. The value of the debit note is mentioned both in words and figures. The debit note is signed by the authorized staff on behalf of the business. Debit note is prepared in duplicate. The original copy is for the supplier, while the second copy is kept by the business for recording the transaction and for future reference. Let us learn about credit note. A credit note is a commercial document issued by the seller to the buyer to indicate an adjustment in the buyer's account for reasons such as return of goods due to defects or damages, incorrect pricing on the invoice, or further discount to the customers. Let us further understand the credit note with the help of a business scenario. ABC Limited sold 100 shirts to MNO Limited for $50 each, totaling to the billing of $5,000. Upon receiving the shipment, MNO Limited finds that 20 shirts are supplied for a wrong color and decides to return them to ABC Limited. Now, if we analyze this business scenario, when 100 shirts were sold to MNO Limited for $5,000 on credit, MNO Limited became the debtor of ABC Limited and $5,000 was receivable from MNO Limited. However, after the issuance of the credit note of $1,000 on account of return of 100 shirts, the balance recoverable from MNO Limited got reduced to $4,000. This explains the business scenario under which the credit notes are issued and their impact on accounting. Basis business scenario of credit note discussed on the previous slide, let us see how a credit note looks like. A credit note is serially numbered and the date of issuance is mentioned on it. Trade name and the complete business address is also mentioned. The name and the address of the person or the legal entity to whom the credit note is issued is also mentioned. The complete details and the reasons for the issuance of credit note are also mentioned on the face of the credit note. The total value of the credit note is mentioned both in words and figures. Credit note is also signed by the authorized staff of the business. Credit note is prepared in duplicate. Original copy is for the customer, while the second copy is for recording the transaction and for future reference. Let us now learn the meaning of the term voucher. An accounting voucher is a record that acts as a supporting document to the entries recorded in the accounting books. On the basis of source documents, voucher detailing the accounts that are debited and credited is prepared. Therefore, an accounting voucher is a written document that serves as evidence of a business transaction. It records the details of a transaction in a systematic manner and is used as a reference for making entries in the books of accounts. Vouchers may be categorized into source voucher or source document or supporting voucher and accounting voucher. We will discuss about the source voucher and the accounting voucher in detail in our subsequent slides. Let us understand the meaning of source voucher. These are the original documents generated at the time of a transaction. Examples of source vouchers are invoices, bills, receipts, purchase orders, and debit and credit notes. Features of source vouchers are: it is a written document. It contains complete details of the transaction. It is a proof of a transaction has actually taken place. It is signed and stamped by the maker. Let us now learn about accounting voucher. These are documents prepared internally by the accounting department to record transactions in the accounting system. Before recording the transactions in the books of accounts, the source documents are analyzed to determine which account or accounts to be debited and credited. Therefore, an accounting voucher is a written document that serves as an evidence and contains the analysis of the business transaction for accounting and recording purposes and is prepared on the basis of the supporting vouchers. Features of source vouchers are: it is a written document. It is prepared on the basis of the source document. It is an analysis of a transaction. It is prepared and signed by the accountant and countersigned by the senior. Accounting vouchers are of two types: cash vouchers and non-cash vouchers or transfer vouchers. Let us now know more about the cash vouchers. Cash voucher is used for transactions involving cash. Cash voucher is prepared at the time of receipt or the payment of cash. Cash voucher are of two types: credit or receipt vouchers and debit or payment vouchers. Credit or receipt vouchers are prepared when cash is received. Cash can be received from sale of goods, sale of fixed assets, receipt from customers, and withdrawal from the bank. Let us now know all about a credit voucher with the help of a credit voucher specimen displayed on your screens for the cash received from a debtor. A credit voucher will have the trade name and the registered address of the business. It will also be serially numbered. Date on which the cash is collected from the debtor is the date on which the credit voucher is prepared. Debtor being an asset will be reduced when the money is received, therefore debtor account will be credited. The amount of credit voucher is written in both figures and words. Details or the brief description, which is commonly known as the narration, is also written on the credit voucher. Credit voucher is signed by the accountant who receives the cash and issues a credit voucher. Credit voucher is also signed by the manager as the authorizing person of the transaction. Further, in the narration, the reference of the supporting document is also mentioned. Let us look at another credit voucher. This credit voucher is for cash sales. Credit voucher will have the name and the address of the business. Credit vouchers are serially numbered and dated. Sales being revenue is increasing, therefore the sale account will be credited. The credit voucher amount will be written both in figures and words. Credit voucher for cash sales will have the narration providing the details of the transaction. It is signed by the accountant who has the responsibility of receiving the cash and preparing the voucher. And it is also signed by the authorized person of the business. The narration on the credit voucher for the cash sales will also have the reference of the supporting document, which in this case is the sales bill number 2020 dated 30th November 24, against which the cash is received. Let us now learn about debit voucher. Debit voucher is prepared when payment is made. Payment may be made against business expenses, purchase of goods, payment to creditors. Let us learn more about debit voucher with the help of a specimen of a debit voucher for cash purchase of furniture displayed on your screens. Debit voucher will have the trade name and the business address. Debit vouchers are serially numbered and date on which it is prepared is also mentioned on it. Since in this specimen debit voucher, furniture is purchased and furniture being an asset is increasing. Therefore, fixed asset furniture account will be debited for this transaction. The amount of debit voucher will appear both in numbers and figures. The complete details of the transaction are also mentioned on the debit note. It is signed by the accountant who prepares it, and it is also signed by the authorized signatory. The narration written on the debit voucher also contains the supporting document number, which in this case is the cash memo number 9988. Let us now learn about the non-cash voucher, which is also called the transfer voucher. Non-cash vouchers are the vouchers prepared for transactions not involving cash or bank. Credit sales invoice, credit purchase invoices, debit notes, credit notes are some of the examples of non-cash vouchers. It also includes journal vouchers used for rectification of errors, and also the other non-cash and non-bank transactions like transactions of depreciation or prepayment, etc. Let us review a transfer journal specimen for credit purchase of furniture. Transfer voucher will have the trade name and the address of the business. Transfer vouchers are serially numbered and its date of preparation is also mentioned. The title of accounts to be debited and credited are also mentioned on the transfer vouchers. In our example, since furniture is purchased on credit from the supplier Homebox LLC, fixed asset furniture account will be debited and the supplier account will be credited. The amount both in figures and words is mentioned on the transfer vouchers. Transfer vouchers also contain the details about the transaction in the form of a brief narration. Transfer voucher is signed by the accountant and is also signed by the manager of the business. The narration on the transfer voucher also contains the reference number of the supporting document related to the transaction. Let us now learn the term compound voucher. A compound voucher is a type of accounting voucher that includes multiple transactions, both debit and credit recorded in a single entry. It is used when there are multiple accounts involved in a single financial transaction or event. Key features of a compound voucher are: it includes multiple debits or credits. It summarizes a single transaction that affects several accounts. It is typically used in complex transactions. Example of a compound voucher is: a company purchases office furniture worth $500 and pays $300 in cash and agrees to pay the remaining $200 on credit to the supplier. The entry of this transaction will be recorded as displayed on your screens. Office furniture account will be debited by $500, cash account will be credited by $300, and the supplier account will be credited by $200 by following the rules of debit and credit displayed on your screens. In our upcoming video on 15th February 2025, we will cover 50 plus questions and answers related to the topic source documents and preparation of vouchers. If you enjoy the content of my channel and appreciate my teaching style, please like, comment, subscribe and share my YouTube channel at the rate Accounting Buddy NB. Do not forget to hit the bell icon so you never miss an update. Thank you and goodbye for now.